What if your investment portfolio sent you a paycheck every single month, without you selling a single share? That's exactly what dividend ETFs do, and in 2026, with interest rates where they are, and the market volatility we've seen, they become one of the most popular ways for everyday investors to build reliable passive income. In this video, I'm breaking down the best dividend ETFs for beginners right now, what they are, how much they pay, and how to build a portfolio that generates $500 a month starting with as little as $100. Let's get into it. First, let's make sure we're on the same page about what a dividend ETF actually is. An ETF, exchange-traded fund, is a basket of stocks that trades like a single share on the stock market. A dividend ETF specifically holds companies that pay regular dividends, cash payments distributed to shareholders, usually every quarter or every month. When you buy a dividend ETF, you own a slice of dozens or hundreds of dividend-paying companies at once. You get instant diversification, professional curation, and passive income, all in one ticker. The question isn't whether dividend ETFs work, they do. The question is, which ones to buy in 2026 given where the market is today. Here are the 5 best options for beginners. 1. SCHD, the gold standard for dividend growth. If there's one dividend ETF that comes up in every serious passive income conversation, it's SCHD, the Schwab US Dividend Equity ETF. SCHD doesn't just chase the highest yield, it focuses on companies with a consistent history of paying and growing their dividends over time. We're talking companies like Coca-Cola, Pfizer, and Verizon, businesses that have paid dividends for decades and kept raising them. Current yield as of 2026 sits around 3.5 to 4%. That sounds modest, but the dividend growth rate, historically around 10 to 12% annually, is what makes this a long-term wealth builder. A dividend that grows 11% per year doubles roughly every 6.5 years. Expense ratio, 0.06%. That's essentially free to own. SCHD is the core holding for most dividend investors for a reason. If you're only buying one ETF on this list, this is it. 2. JEPI, high income for conservative investors. JEPI, the JP Morgan Equity Premium Income ETF, is for investors who want more income right now, even if it means slower long-term growth. JEPI uses a covered call strategy on top of a portfolio of low volatility stocks. The result? A current yield of around 7 to 9% paid monthly. Monthly payments make budgeting easier and compound faster when reinvested. The trade-off is that JEPI tends to lag in strong bull markets because the covered call strategy caps some of the upside, but in sideways or volatile markets, which 2026 has seen plenty of, it outperforms. For beginners who want immediate cash flow rather than long-term growth, JEPI is the top pick. Many investors pair it with SCHD, JEPI for income now, SCHD for income growth later. Expense ratio, 0.35%. 3. VYM, the diversification play. VYM, the Vanguard High Dividend Yield ETF, is the broadest, most diversified option on this list. It holds over 450 companies, weighted toward large-cap value stocks in sectors like financials, healthcare, consumer staples, and energy. Current yield, around 3 to 3.5%. What VYM offers that SCHD doesn't is sheer breadth. With 450-plus holdings, no single company's dividend cut can meaningfully impact your income. It's the most set-it-and-forget-it option on this list. Expense ratio, 0.06%, tied with SCHD as nearly free to own. VYM is the right choice if you want maximum diversification and don't want to think too hard about which companies you're holding. It's boring in the best possible way. 4. DIVO, quality over quantity. DIVO, the Amplify CWP Enhanced Dividend Income ETF, takes a different approach. Instead of holding hundreds of companies, it holds around 25 high-quality blue-chip stocks and writes covered calls selectively to boost income. The result is a yield of around 4 to 5% with lower volatility than most dividend ETFs, and a portfolio of names like Apple, Microsoft, United Health, and Visa, companies with strong balance sheets and durable businesses. DIVO is the pick for investors who want quality over quantity. The concentrated portfolio means each holding is carefully chosen, not just added because it pays a dividend. Expense ratio, 0.55%, slightly higher, but justified by the active management and the quality of the holdings. 5. QYLD, maximum income, minimum growth. QYLD, the Global X Nasdaq 100 covered call ETF, is the highest yielding ETF on this list, currently paying around 10 to 12% annually in monthly distributions. Here's the honest trade-off. QYLD is designed purely for income, not growth. It sells covered calls on the entire Nasdaq 100, which generates significant premium income but caps any price appreciation. Over the long run, QYLD does not grow in value, it returns cash. This makes it the right tool for a specific investor, someone who wants to maximize current income and doesn't need the portfolio to grow. Think early retirees or investors supplementing other income streams. Do not put your entire portfolio in QYLD, but as a 10 to 20% allocation inside a diversified dividend portfolio, it's a powerful income booster. Expense ratio, 0.60%. So, how do you actually get to $500 a month? At a blended yield of roughly 5%, which a mix of these ETFs achieves, you need approximately $120,000 invested to generate $500 per month. That sounds like a lot, but here's the key insight. You don't need $120,000 on day one. You start with $100, invest consistently, reinvest your dividends, and let compounding do the work. Someone investing $500 per month into a portfolio like this, with dividends reinvested, reaches $500 per month in passive income in roughly 10 to 12 years. Speed it up with higher contributions, and that timeline shrinks. The math works, the only variable is starting. Those are the 5 best dividend ETFs for beginners in 2026. SCHD for growth, JEPI for monthly income, VYM for diversification, DIVO for quality, and QYLD for maximum yield. If you want the full breakdown of how to build a dividend portfolio from scratch, including what to buy first and how to allocate, subscribe. That video is coming next week. Hit the subscribe button, and I'll see you in the next one.